All right. So there's something very interesting which is happening, and I just thought I'll make a little very interesting sort of a video. You know what's happening today in our markets is everything seems to be moving in sync and together. Okay. Uh, so what is happening is here you have Nifty, you have the US dollar, you have the S&P, you have the gold, you have the crude. Everything's basically moving all in sync and everything together, which is little weird. You know, it doesn't happen all the time. Okay. Um, what's happening is, let's look at it from a very, uh, sort of a US standpoint or from an international standpoint. See, very strange, very interesting, and very different. Okay. Gold and the stock market, it shouldn't actually move together. What should happen is it has to have some sort of an inverse relationship. Yogesh bhai, you have your hand raised. Is there something that you are asking? Oh, is it? But I can. My video is off. Yeah. But the video is on here.
We can see you.
Guys, can you see my video?
Yes, yes, yes. We can see your
Sorry, we're
screen.
having some little bit of a technical issue and things like that. So Zaid was telling me you can't see my video, but you can see me. You can
Yeah.
see the slide. You can see my video also on the side and that, right?
Yes, yes.
Okay, thank you, Jude. All right, okay, sorry. So we'll just move forward, okay? So what is happening here is that, normally this relationship is supposed to be like a little inverse relationship, okay? That between gold and between the US market, especially when the US market is higher, gold should be technically lower. And when the gold is lower, naturally the US market should be higher. But that's not happening right now. Right now, everything is moving together. And there is something very interesting which is happening here, and which is what we are going to try and highlight. Okay. But having said that, for a moment, I just want to stop this little share, and I want to, just check with you all. Why do you think gold prices move up? I just want to have generally some views. You can unmute yourself and come through just to have a little bit of sense in terms of why do you think gold prices should move up? What is the consensus opinion here?
Yeah, hi Kartik, I am Prakash here.
Yes, Prakash.
So I think, yeah, see, the reason why gold is because of the uncertainty of the war. Okay.
Yes, okay,
Yeah,
okay.
and the crude price, the root of the, the disruption of the route for
Correct.
which price cost has increased. So there are a lot of uncertainty. So when
Correct.
there is a global uncertainty, gold generally go. But why stock market is going up? Because of USA now the unemployment is at low level, growth is happening. So that is why the equity market is reacting to the price earning of
Sure,
the
sure,
companies.
sure.
Yeah.
Any other opinion, any other view, any other reason why do you think gold is moving up?
Yeah, Kartik bhai, recently I was reading one news
Yes, Harshit.
that China is buying a lot of gold, and because of that reason, maybe the gold prices are going higher. I mean, I'm not sure, but I was just reading a news, so I thought probably that can be the reason.
Yeah, 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 absolutely.
Okay.
So, in fact, that is one of the reasons which really came out. Of course, war, uncertainty, and all these kind of things, though, are there, and they're always there in front of us. So, in terms of what really makes our, the world have a higher gold price, of course, it is fear, it is war, some sort of a disaster happening. And anytime there is a kind of a crisis, we tend to see gold moving up. But what we have observed in the research that we did is that just because of fear, just because of war, there is not so much of a surge that happens. And Harshit, we are going to explore that point of yours, about China having to buy and things like that. So we'll just go into that in a little while. But yes, I mean, broadly speaking, we know that these are the common factors which actually tend to trigger an upward movement in gold. Now, why is gold significant? Just let's spend like 2, 3 minutes here just to talk about gold and why is it significant, what's happening around here. See, liquidity and acceptance, we all know that anywhere in the world, whether it is a Libya or whether it is a Japan or in India, everywhere, gold is very well accepted. And it's just a different thing that we cannot freely carry gold and move around the world. But if we actually had gold and if we tried to do some sort of a transaction with anybody in the world, there is huge acceptance. I mean, without any sort of questions asked, right? Liquidity is phenomenal. Anywhere in the world you go, you can liquidate your gold. Value protection happens. whatever might happen to other asset classes when they move up and down in value, gold also does fluctuate. But broadly speaking, it does protect a lot of value that we have in terms of the wealth we hold within the gold. Now, there is another little theory. I'm not sure how many of you all are aware about it, but there was a theory called the Bretton Woods system. It's actually more than a theory, it's a system. So, what happened in the Bretton Woods system in the early 1900s was that it was introduced in America, where, see, the initial medium of exchange for people was to exchange one good for another, barter system. After that, they came into coins, and after that point of time, gradually, fast forward, and we moved into paper currency, or what is known as fiat currency. Now, when paper currency and fiat currency was all popular, what started also happening at that time was that US decided that we have our US dollar bills, and we can't really transact so much into them as much as we would like, because it needs to be having some sort of collateral, or some sort of a storehouse of value. And which is why it was said that 1 ounce of gold deposited in the bank was equivalent to $1. And that's how the bank would operate in paper currency, and people wouldn't have had to carry bags of golds or gold coins and things like that for their day-to-day and usual transactions. That was the Bretton Woods system. Now, over a period of time, they started printing more and more and more and more and more money. Now, as they started printing more money, eventually, at some point of time, I think that was in the time of President Nixon, that they decided that let's depart from this Bretton Woods system, because now we have far too many dollars in the system, and we don't have enough protection or enough collateral in terms of gold. Once upon a time, $1 bill was equal to 1 ounce of gold. And thereafter, it became $10 and $100 and $1,000, all equivalent to that same ounce of gold as a collateral. But then it became way too much to do anything at all. Right. So that is why gold today is very significant, because originally it was actually money, and as a facility we were trading in paper currencies. But now we are only trading in paper currencies, and there's a lot of question on the viability and fungibility of that paper money itself. And stay on with this thing, there's something very interesting coming up. Now there are about 3 different theories that I want to put there. And why theories? Actually, these are things that are happening here, but there are theories on the premises of which we are going to talk about why what is happening to gold is happening at the moment. Okay, so this is clear so far that gold has been very, very significant, no doubt about that, right? Now let's move into the next sort of a zone, de-dollarization. This noise of de-dollarization is getting louder and louder by the day. Now, what is de-dollarization in a very, very simplistic sort of a format? Very simple uh, definition of de-dollarization is that the world wants to now move away from dollars. We don't want to have too many dollars that we are holding. We don't want to transact in dollars. And obviously, a lot of reasons for them. The prima facie reason being that dollars, because they are like the reserve currency of the world, they have the might to print as many dollars as they want. Now, think about it this way. Trade was originally based on some sort of a collateral, that if something went wrong, it was like an insurance. If something went wrong, you had gold as a backup, and that gold would come and save your transaction. So in the early days, when people would trade, merchants would trade on ships, and when goods were moved from one country to the other, and paper currency was being used, somewhere at the back of it, they knew that if something went wrong, the insurance was the gold behind. But with dollar being reserve currency and the departure, or the complete disbandment of the Bretton Woods system, and with America printing as much as they liked, uh, actually kind of made the whole world really, really unsettled, so to say. And the biggest printing fiesta that happened, as we saw, what happened during the COVID pandemic. So at that point of time, literally the US government, added so many zeros. And as we speak today, there is a lot more dollar that they are still printing, and they're giving out, so much so that today USA has a very different a different level, a different kind of a problem, where their total national debt, or the amount of money that they owe the rest of the world, is way larger, is much larger than their GDP. So it's insanely large. And compared to the other countries, where the other countries could be at 5%, 6%, 10%, USA is more than 100% of their annual GDP that they are holding as loans with the amount of money that they've printed. See, printing if money is one thing, but then there are other problems also that happen. Okay, the other problems that are happening here is the fact that you also have a situation where, because you are the reserve currency, you are actually in a situation where you are controlling global trade. Not only controlling, you're also telling the global trade that this is how we will operate, and you have the power to apply sanctions. So if somebody does not sort of adhere to your international political principles or to your international standings, then you will very simply come and completely sanction that country off. Which means what you will do is you are going to freeze all their dollar reserves. Now, if you are going to freeze their dollar reserves, just think about it. They can't operate any further in their dollars. Okay, they cannot, buy and sell things. And we saw an example of that as soon as Russia sort of attacked Ukraine. And at that point of time, what they did was all Russia's money, billions of dollars of money, was just completely, blocked. And they could not really trade anything at all in that. Okay, so that happens. Then there is another angle to the US dollar, the petrodollar agreement. So, which means if you wanted to buy oil, and oil was the greatest commodity, still is the greatest commodity that most countries need, because everybody depends on oil in one way or the other. Now you had to buy oil in US dollars. So USA again sort of dictated that the international trade for oil will happen in US dollars, which means if you don't have US dollars, you can't buy. Now imagine a situation where Russia uh, was given these sanctions that you cannot trade, and therefore nobody can interact with Russia. They will not get their dollars. They will not be able to buy other things, and that created a lot of imbalance in the world, so to say. So what the whole world wants to do is move away from dollars, and for a whole variety of reasons. One is the fact that there is too much power that America yields or has in terms of applying sanctions. Uh, there's too much of debt in that country. One doesn't really know the actual worth of the dollar and all of that. Now, this concept of de-dollarization becomes very important to keep at the back of the mind. So we'll park it here and we'll move to another angle of what's happening, and which is the BRICS currency. So just like euro, we have the BRICS currency. Well, the BRICS currency was announced a while ago last year. And it's not only the BRICS countries, which is Brazil, Russia, India, China, and South Africa. Now, there are many more countries which have joined: Argentina, for example, Egypt, Saudi Arabia, Kazakhstan, Indonesia, etc. These people have also joined. Now, again, what is the intention? See, all these things are connected. We have to understand these three things to actually understand why gold price is moving up. And you all answered correctly that, of course, gold price is moving up because of fear, war, concern and grief and anxiety around the world, uncertainty around the world, and also because of the China factor, which Harshit mentioned. Now, having said that, why is that happening? We are going one step in deeper to even find out. And for that, we had to understand these three concepts. So we've got the BRICS currency. Now, BRICS is a currency which one doesn't know how it's going to operate because it's not officially announced. It seems that the BRICS countries are working on this in the background. Okay. It seems that this is going to be based on the blockchain technology, which means it's going to be in the digital format. And not only that, it's going to be extremely strong and secure around the world. But having said that, that currency is going to be backed by a basket of commodities. And in that basket of commodities, there's going to be gold as well. So it's not only going to be pegged to the gold, but just like the Bretton Woods system that we spoke a while ago, the way the US dollar was only pegged to the gold, here it's going to be pegged to a basket of commodities, and in that there will be gold. BRICS then will become a common system of payment and making payments and receiving payments as a system for all. And for all means how large is the population that we are talking about? Just think about it. BRICS countries and these other associated countries with BRICS will all have a population base of close to, I mean, not population base, usage base close to about 3.3 billion. Now, out of 3.3 billion people using, just think about it. Today, the population of the world is about 8 billion people. Out of 8 billion people, 3.3 billion is like an official statistic that the BRICS currency thinks that this will be the number of users. Okay, 1.4 Indians, but of course, you take away a lot of them who are not on technology or below poverty line. Same for China and same for a lot of other countries. Still 3.3 billion, which is like half the world population is going to use this currency versus today, the G7, the euro is being used by 800 million people and which is nothing but just 10% of the global population, which is the G7 countries. In today's rate, can you please mute? Is somebody okay? Done. Thank you. Uh, in today's parlance, the unofficial, again, this is like a statistic which is freely available. What is the exchange rate, do you think, for one BRIC currency versus the dollar? I mean, we did some Google search and we found it is 13 point something, 13 plus dollars. And in fact, the last 4 months itself, it has gone up by a couple of dollars. So forget about Bitcoin, forget about crypto, think about BRIC currency. One BRIC currency looks like almost $13 today. Okay. So this is the second thing to keep at the back of the mind. De-dollarization, the world wants to get away from dollars. There is a BRICS currency because if the world stops trading in dollars, what will the world trade in? We can't go back to the barter system of the of the system that was there a century ago. So you need to have something different. That is the BRIC currency. Now the third thing. So why is there this massive gold rush that we are seeing? Okay. So yes, there is war. Yes, there is Ukraine that is happening. Uh, yes, there is all these kind of crazy things that are happening. Uh, we think that there's a lot of people who are going to use this BRIC currency that we spoke of. But then, why is everybody just out in a rush to buy gold? Please think about it. On one side, the world wants to go. I'm repeating this thing, okay, at the cost of repeating. One side, we want to move away from dollar. The other side, there's a BRICS currency. And the third side, there is gold buying happening. How are these three things connected with each other? Is the question. So now, see, at our level, at your and my level, it's very, very difficult to exactly pinpoint and say that this is the geopolitical stress that is happening. But the reasons are far more geopolitical than anything else. Okay. And they are so much more complicated beyond our understanding, but let's try and make some sense out of this thing. So, what happened in 22 is when, at the time where Russia attacked Ukraine, US came and said, look, we're going to sanction Russia. We're not going to deal with you. Nobody's going to deal with you. Europe is not going to buy your gas. You will not have any money that you will get because of selling gas, and you will not be able to trade with the world. So they tried to isolate Russia. Now, somewhere, if you remember, during the COVID times, there was a lot of geopolitical stress happening between China and Taiwan also. Okay. So China was also continuously, making a point to the global community that Taiwan is a part of China, whereas Taiwan on its own wanted to be independent. Uh, the other side, the Russia-Ukraine conflict going on. So what the world suddenly realized that here, Uncle Sam is trying to untwist the whole world in such a way that you will not be able to survive if you don't adhere to US diktat. As a result of which, one, let's move away from dollar. Second, let's have a different currency. And third, let's make sure that this currency is stable. Let's make sure that this currency is backed by some solid commodities which cannot lose value. And which is why suddenly you find that there is a huge demand, not only by China, but by the rest of the world. Literally, most of the central banks around the world have been buying gold. And this is something that has not happened in the last 75 years. See, most of the times For all of you who interacted with me, most of the times I've been saying, yeah, you want to buy gold, buy it about 4, 5%, 6%, to your entire net worth. Let it be used as a mere hedge and nothing more. But suddenly we are having to take notice of gold because the spike in terms of demand, China has not bought this kind of gold in the last 75 years. And do you know what figure of gold they bought last year? It is 225 tons in 23 alone. Okay. Let me just very quickly share something else with you. There was a very interesting data that we had. Um, Here it is. Okay, this is a spreadsheet. This is a report from the World Gold Council. Okay, this is a monthly purchase of gold. So this, I'm just going to highlight it for you. This is a little tiny. I'm not sure if all of you will be able to see it well, but nevertheless, so what is happening here is 220 tons, 25 tons in 2023. In the last 18 months, you see in this yellow cell, China has bought 314 tons of gold. And if I sort of just go back the line in terms of purchases, this is October 22. And before that, there wasn't so much of a purchase interest. If you can see all the way for you, on and off, they would buy 3 tons, 5 tons, 10 tons, which was sort of normal. If I keep looking at the history, and this report is a very, very interesting history. If somebody is interested to know the history of how different countries have been buying gold, I found this report terrific piece of information. So happy to share it with you. Let me know. So China itself buys about 314 tons and counting as we speak, and this data is up to Feb of 24. Okay, uh, and out of which 220 tons has happened in 2023, and this kind of buying has not happened in the last 75 years for China. Okay, India has bought about 36 tons of gold in the last same period of about 14, 15 months. But if you see the trend for India, we are broadly the same because maybe we have enough domestic demand also to buy that. So nothing extraordinary. But look at something is happening. Why is Poland buying 130 tons of gold? Singapore has bought 83 tons of gold. Okay, Turkey, there are certain figures of estimates of sale of gold, but Turkey has bought about 73 sort of tons of gold. So there are a lot of countries, and especially uh, more countries like Kazakhstan, Jordan, Czech Republic. I mean, all these guys have bought more gold in the last calendar year than they have ever bought in the last 50, 60, 70 years. Amazing, right? So they are expecting something to happen to the dollar. Now, what is anybody's guess? Now, we don't know at our levels what is going to happen, but analysis says and reports are saying that once upon a time, China in 2010 had the largest amount of US dollar reserves or US dollar bonds. $3 trillion worth of US currency was held by China. Today, 14 years later, that figure is down to 800 billion, which is just little less than a trillion. Okay. So let's not get into the calculation of million, billion, trillion. Otherwise, we'll get lost and we'll need a lot of time for that. But don't worry about this number, even if it doesn't, appeal to you straight away. The fact is that in 15 years, China has reduced its dollar holding by almost as much as about 70% odd. So that itself speaks a lot about how much China has been dumping dollars outside, and the rest of the world market is also doing. There are reports where India was buying oil from Russia during the time Russia was under sanctions, and that we did via Chinese currency and via the Japanese currency, right? We bypassed the dollar. A lot of these things are happening today. Now, as a result of which, these three things, if you sort of combine these three things together, the fear factor, one factor, the other thing that the central banks of the world and all of them put together are buying crazy amounts of gold. And the third is maybe a new currency coming up and it needs to be a collateral. So all the countries, all the central banks are really stocking up on their reserves because in future, if this is going to be the basket of commodities on which the new currency will be based, then they don't want to be missing out and they want to make sure that their local currency is very strong. So the geopolitical game is a much larger one than what we can understand. Please mute yourself, whoever's thing has got unmuted. Okay, moving on. Now statistics, okay? In this calendar year, from January till now, Gold and silver is up about 15% in the Indian markets, international market about 10%. The difference is because obviously because of the exchange rate between the dollar and the rupee. But if you see, this is the Indian market last, you know, prices 12%, 11%, plus 6 months is about 16%. So average as we speak is about 15% for gold. And by the way, silver is also not very far behind. It's also in the same space. Okay. So that is something that happened. Okay. Next, I want to show you something very interesting again. Okay, sorry. Before I go to that, just a little summary, a quick summary. So for everybody who's dealing a lot in US dollars, as you can see, there's a lot of headwinds, means there's going to be a lot of resistance to trade in US dollars as the whole world thinks. And from what our analysis is showing, that there's going to be a lot of turbulence with the US dollar. And gradually, it's a little too early to jump the gun. We don't know. We'll find our currency, Indian currency, and somebody in China will find Chinese currency, and somebody in Australia will find Australian currency. Will all start appreciating against the US dollar. Okay. Now, normally, these kind of sweeping predictions one doesn't like to make, but then the data is so compelling, and we seem to be right around there. And with the increased level of activity in gold and silver, which we've not seen in so many decades, is kind of indicative of the fact that something larger than what we have imagined might happen. And as a result of it, there is a lot of tailwind. There's a lot of push coming on all the precious metals. In fact, the whole metals pack is actually running. If you are observing prices of copper, prices of steel, iron ore, zinc, everything is actually sort of moving up. Okay. Now, here comes the big surprise. Okay. Now, what's happening here is that gold, of course, is moving up, but silver has a demand forecast of about 1.2 billion. This is the highest demand for silver in the history of our known existence in terms of what people have been interested in silver. Now, silver, why do people buy silver? So the popular story is that it's a hedge. It's used in industry. It's used in semiconductors, and there are lots of stories like that. But along with gold, if silver also is a basket of commodities which is backing the new BRICS currency, then the entire thinking and the entire perspective changes once again. So that's something that is really some news to sort of chew on. There is a relationship, there is a ratio between gold and silver. And the ratio is something like a 0.7 or a 78%. Okay, without getting in the ratio, what it means is that if gold moves up to a certain level, silver has to move that much higher and faster. So again, this is some analyst prediction that we figured from a very large commodity player around the world called FMX. And their view is that silver would go to the $50 mark if gold moved through 2200. Now, this is a little old, maybe a week, maybe 10 days, but gold has already crossed 2200. And silver, if you know, is very far away from $50 mark right now, which is why the surprise. Now, watch this little chart very, very carefully, okay? Now, I'm going to use this annotation. Okay, my marker is red, and I'm going to circle red here. Now, mark this. This was somewhere in 2011, where gold was at about 2,000 odd dollars, 1,800 odd dollars, not 2,000, 1,800. Okay, this was the level of gold in 2011 at this point. Okay, I'm just drawing a red line here so you can see that. Now, this gold went down, of course, came back and all of that. But now gold has had like already it has moved up about 25% from the highest level ever. Okay, so there's something interesting which has happened. So gold just about recently touched almost $2,500, and then right now is back to it's just corrected a little bit. It's back to 23. Everything moves in waves, right? Nothing moves like one way up, but it's come down back to $2,300. But the important point is this was a very long, important level of gold, 2,000 US dollars per troy ounce. This little thing that I'm making a little bit of a mess here, it has crossed and it has gone beyond this thing, okay? Why is this important? Because gold anyways is doing, the whole world is buying, central banks are buying. But look at silver. Silver in the same time in 2011, which is here, Silver was at almost $49-50 here at this point. Okay. This was the point of $50 of silver. 49, we'll just round out to 50. Time again, it was approximately 2011. So after 13 years, this thing is happening here again, that gold has already crossed his 13-year, or in the last 13 years, whatever was the price, highest price of gold, it has crossed and crossed it by 25%. Silver, on the other hand, is still hovering at around $26, $27. Silver is here. So in the very, very short term, we think that there is still a very, very handsome sort of an appreciation possible in silver, and which is what is indicated by this little arrow here. Okay, this is just purely educational analysis, but this is what it is. And from what FMX has just predicted, that silver could actually go to 50, which is crazy. Silver doubling. Can you imagine what will happen? So, so many interesting facts, and which is why we thought it was an absolutely compelling reason to actually run a whole session talking about just gold. And the surprise really was silver for all of us. So, an amazing sort of development that's happening around the world. And I think with this development, there's a lot of opportunity. There's a lot of things that we could participate into, and I think we should participate. And with that, what I'm going to do is I'm going to stop the recording, and